What is up, everyone? Nick here. Welcome to the show if you're new. Thanks for coming back if you're not. As our world continually and increasingly emerges from the global health situation, we have seen the revival of many businesses and industries. Consumer discretionary spending rates are on a rise as restrictions ease, paired with historically high saving rate over the past year. This mass anticipated spending, in conjunction with the relentless government spending and trillions of dollars injected into the public through stimulus packages, has many investors and analysts worried about what's to come. If we look back throughout history, we are seeing more and more red flags appearing that are all pointing to the same thing: increased inflation. A steadily increasing 10-year treasury yield, GDP rebounding, little interest from the Fed to taper bond buying programs, extremely low interest rates, and an economy that is picking up steam. All of this historically leads to inflation. This has many savvy analysts reallocating their money out of tech and financials, which have dominated the past year, and into inflation hedges. Maybe no industry more has seen investor interest as of late than commodities, and specifically gold. In today's episode, we're going to be covering a fascinating gold exploration company that has been making huge moves as of late and stands to benefit from the rising price of gold itself and the increased investor interest to hedge against possible inflation. This one's going to be a fun one. My name is Nick. Welcome. Let's dive right in. Before we get to it today, make sure to always do your own research before allocating any capital to the stock market. Penny stocks do typically come with more potential reward, however, this is typically paired with increased risk. Make sure to come to your own conclusions, formulate your own decisions. Disclaimer, this is a sponsored video. I am not a financial advisor, and this video is for entertainment purposes only. Alright, ladies and gents, let's dive right into it. I'm first going to highlight the company, their background, where they are moving into the future, and then cover their balance sheet, charting, analytics, and statistics. Alright, so the company of today's episode is called Leocor Gold, trading on the OTC under ticker symbol LECRF and on the CSE under ticker symbol LECR. They are a junior exploration company founded in 2018 and based in beautiful Vancouver, British Columbia, Canada. Now, if you have tuned into my channel before, you will be well aware of how bullish I am on the entire gold industry currently, and specifically the massive potential that many junior miners hold, and Leocor is of no exception. Forbes has stated that precious metals mining stocks probably provide a better inflation hedge than base metals and other commodities. We have seen a huge run-up in the price of gold as investors continually turn towards it in times of uncertainty, and we are once again pushing near all-time highs. Now, what makes Leocor different from its competition? Well, let's dive into their business ops and future direction. Now, what I find unique and bullish about Leocor is their management and their geographic location. They are focusing on Newfoundland, Canada, a resource-rich area and a very often overlooked area. Leocor is honing in on underexplored and overlooked areas in Newfoundland, which is rapidly becoming a re-energized hotspot for mining exploration as it is underexplored and already has extensive infrastructure, resources, and a skilled workforce from previous mining in the area. Leocor's CEO stated that, quote, Newfoundland is getting ready to undergo one of the most aggressive gold exploration phases since the 1988-89 rush, where more than 80% of the known gold showings were discovered. The company has many projects under three main districts: the 100% owned Western Exploit District, the 100% owned Baie Verte District, and the 70% owned Gander District. Their entire portfolio amounts to more than 152,000 hectares of land with 5,760 mineral claims. This is a massive square footage over very diverse terrain and really expands the company's ability to hit gold veins itself. The previous exploration expeditions in the region confirmed the presence of multiple zones of high-grade gold mineralization, and Leocor is now moving in to exploit this mineral-dense area. The data obtained from the company's CEO, Sean Ryan, has uncovered that the most recent acquisition in its Western Exploit District potentially has the ability to scale across previously unexplored lands. The projects are all very promising in my opinion. I scrutinized them and their analytics, and I really do like what I'm seeing. I do think that Newfoundland is a very underexploited and untapped precious metal area and could be extremely lucrative for the pioneering companies re-entering the barren and mineral-dense region. There's very good access, great infrastructure, skilled workers, and really robust data on the region already in place. There are also promising regions that have never once been tested for gold, which Leocor sees as a unique opportunity, as the majority of the claim itself has never seen any gold exploration whatsoever. During gold's previous run-up, we saw junior miners not only follow this massive gain, but often exceed it, and this is an important point. This has caused many analysts to move into the precious metal exploration stocks to expose their portfolio to both the power of gold once again increasing in value and to the potential of striking it big on one of the claims. I do think as the world reopens and money continues flooding into the market that we will begin to see inflation tick up. And as this happens, we will likely see inflation hedges rise in valuation, such as gold itself and gold exploration companies. Alright, whenever looking at a company, I always like to take a deep dive into the management team. Here, I'm looking for experience, past success, and a robust and diverse team of experts, and that's exactly what I have found. The CEO and director, Alex Klenman, has more than 30 years of public and private sector business development, finance, marketing, branding, media, and corporate communications experience as CEO of Leocor Ventures. As a consultant, he has worked very closely with other precious metals companies and currently holds board and senior management positions with other publicly listed resource companies. This is something I always like to see. The CFO and also a director, Zula Kropivnitsky, who has been the CFO for various other publicly listed companies, has a wealth of experience in the resource sector. She has served as controller to other mineral companies and exploration companies as well. Sean Ryan is the technical advisor who has decades of experience in geophysics and local contracting firms. He has also developed a deeper soil sampling technique while in Dawson City, Yukon, that has since become the industry standard. The list really goes on here, a very experienced and trustworthy team at the helm of this operation. Now let's get into the company's analytics. The company is currently sitting at 70 cents Canadian after having a massive 6 months on the market, up around 50% in this time. Now this coincided with the run-up that gold experienced itself and investors beginning to fear the effects of inflation. This is very good news as this could be an inflation hedge in the future. The stock in the past few weeks has pulled back, which could mark an opportune time for investor capital entry. They are a nano-cap company with a market cap of around $20 million Canadian. They have a substantial 52-week delta with a low of just 35 cents and a high of $1 flat, so quite a lot of movement here. They have $1.56 million in total cash, however just raised slightly north of $11 million in private placement, which was only announced on July 14th. They have a massive current ratio of 27, indicating far more assets relative to liabilities, which I really am bullish on. Now, as with almost all junior mining companies, they have not yet generated revenue, which is standard, however, it should be noted and taken into account. Their shares outstanding are sitting at 31.68 million, so when good news is announced, shares will typically surge, however, the same can be said of the opposite. I really do like the potential Leocor and gold itself holds. The last time there was an inflation crisis in the 70s, we saw the valuation of gold really take off, and investors and analysts think that the same could potentially happen once again just over the horizon. I am really bullish on Newfoundland as a geographic mining location. The competition is much less fierce here, and it remains largely underexplored, giving an upper edge to companies like Leocor with its massive portfolio encompassing more than 150,000 hectares. Anyways, everyone, as always, make sure to come to your own conclusions, formulate your own decisions, and do your own due diligence when contemplating allocating capital to any investment. Anyways, folks, I'll see you all in the next video. Take care, happy trading, cheers.